Hello friends, we were discussing about company accounts, right? And in company accounting, I started with share capital. In company accounts, we started with share capital, right? I told you what is a share capital, how we issue the share capital. We do not have the money of ours. We ask money from people outside, right? And we issue them receipts, right? The receipts we issue are called the shares. That is, we issue share to the people from whom we borrow the money, and those receipts are known as shares. Then we discussed that we have to pay interest on this money that we are using, because this money belongs to some other people, and that interest is known as dividend. Then in the last lecture, we discussed about section 43 of Companies Act 2013, which defines the type of shares. We have basically two types of shares. One is preference shares and the other is equity shares. Preference shares have preferential rights, right? And equity shares do not have any preferential right as to dividend and as to their money in case of winding up of company. Clear? Clear, friends? So now in this lecture, what we are going to do is we are going to discuss about classification of share capital. What is share capital? Share capital is the money that we are going to raise from outside, and that money we are going to use in the business. Clear? This is the money that we are going to raise from outside. Now, if I talk of share capital, I have three types of share capital. One is authorized capital, right? Second one is issued capital, and third one is subscribed capital. Clear? Now you must be wondering what all this is about. Now let's see. Listen to my example very carefully, right? This is you and this is your father. Now, what you do, you receive rupees 1000 as pocket money every week. From your father, you receive rupees 1000 as pocket money every week. Okay? Right? In rupees 10 notes. Clear? You receive 1000 as pocket money every week in rupees 10 notes from your father. This is the maximum money that has been authorized by your father. Rupees 1000 is authorized by your father. Clear? Right? So what I told you, classification of share capital, the first one is authorized capital. Now, what is an authorized capital? This is the maximum amount of money that a company can raise from outside, right? So what is authorized capital? Authorized capital is the maximum amount that a company can raise by issue of shares. Here, your father has authorized that you will get maximum 1000 rupees. Clear? So this is your authorized capital. Authorized capital is the maximum amount that a company can raise by the issue of shares. Clear? What is authorized capital? This is the maximum amount that a company can raise by issue of shares. You can't go beyond your authorized capital. Clear? This is here who is fixing your authorized capital? Who is fixing this amount? Your father. Your father is who is the father of companies? Companies are governed by. This is governed by who is the father of companies? The father of companies is Companies Act 2013. So as per the provisions of Companies Act 2013 plus what is written in the memorandum in the opening document of the company, according to that you set your authorized capital. That is the maximum capital that a company can raise by the issue of shares. Whether those are preference shares, whether those are equity shares. Clear? This is governed by Companies Act plus memorandum. What is memorandum? See, memorandum is a document of the company where you lay down all the rules and regulations of the company. That is memorandum. Where each and everything related to your company, every detail is given in memorandum. One is memorandum and articles of association. Right? Just go through the theory of these two in the books. Right? You will understand that these are the documents that have all the details related to the company, like when is the company coming into force, who are the directors of the company, right? What is the capital of the company, what are the rules and regulations laid down by the company. Everything is given in memorandum and articles of association. Clear? So what is authorized capital? Is this clear to you? You will get 1000 per week in rupees 10 notes. This is authorized by your father. So authorized capital is the maximum amount that a company can raise by issue of shares. Clear, friends? Now coming to the second. Now what happen is you are to get 1000 as pocket money every week. Right? Now on first day of the week, you ask your father to give you only 500 rupees in rupee 10 notes. So how many notes are to be given? 50 notes at the rate of rupees 10 per note, 500. This much clear? Now what you say at the beginning of the week, you say to your father that you give me 500 now and give me 500 later on. Why? Because you know if you have 1000 rupees in your pocket, you will spend it early. If you have 500 in your pocket and you know 500 is safe with your father, you will spend 500 rationally. Right? If you get 1000, you might spend that 1000 in one day. But you know when you have only 500, you might spend 500 in 3 or 4 days. Then take another 500. So right now, on the first day of the week, you ask your father to give you only 500 rupees in rupee 10 notes. So your father will give you 50 notes at the rate of rupees 10 per note, that is 500. So your requirement is 500 rupees, that is 50 notes of 500, right? This is what we call it as issued capital. Issued capital is the amount that the company wants to raise through issue of shares. See, the authorized capital was the maximum amount that can be raised by company. Issued is the company will assess that right now in the beginning of the beginning of the business, we need this much money. So this is the money that we are going to raise through issue of shares. That is known as the issued capital. That means the number of shares you are issuing, and according to that you will receive money. So your requirement was 500. You are ready to issue 50 receipts. You are ready to issue 50 shares of rupees 10 each because you need only 500 rupees. So that is issued capital. How much shares you are issuing, the amount that the company wants to raise through issue of shares. Now make an important note here. Issued capital will always be less than authorized capital. Clear? Because authorized capital is the maximum that we can raise, and issued is what we want to raise right now through the issue of shares. Clear, friends? What is issued capital is clear, right? Authorized is your father has authorized that you will get 100 notes of rupees 10 each is equal to 1000 rupees per week. Your requirement is 500 rupees right now. That is at the beginning of the week. So you are ready to issue 50 receipts of rupees 10 per receipt. Clear? That is, you want to raise only 500 rupees right now. That is issued capital. The amount that the company wants to raise through issue of shares. Clear? Now, third point. What is subscribed capital? Now, what happens is you asked for 50 notes at the rate of rupees 10 per note is equal to 500 rupees, and your father pays you 500 rupees. Simple. He gives you 50 notes at the rate of 10 per note, and you issue 50 receipts. Right? So this amount that you have received from your father, that is 500 rupees, is your subscribed capital. What is a subscribed capital? What is a subscribed capital? Subscribed capital is the amount received by the company against issue of shares. Clear? So you issued 50 receipts of rupees 10 each, and you get 500 from your father. That is the subscribed capital, the amount that has been received by the company against issue of shares. Clear? So I told you that share capital is of three types: authorized capital, issued capital, and subscribed capital. And I have explained all the three types with one single example from your real life. That you receive 1000 as pocket money from your father every week in rupee 10 notes. So this 1000 is the maximum amount that you will receive from your father, that has been authorized by your father. Similarly, in company we have a authorized capital which says the maximum amount that a company can raise by the issue of shares. It is governed by Companies Act 2013 plus the memorandum and the articles of association of the company. Clear? So that is authorized capital. Now you have to receive 1000 from your father in the beginning of the week, but you say to your father on the first day of the week, when you were to receive 1000, you say to your father that I have only 50 receipts of rupees 10 each, so you give me 500 only. I have the requirement of 500. I have 50 receipts. I will issue you 50 receipts. You give me 500 rupees. That is the issued capital, the amount that the company wants to raise through issue of shares. Issued capital will always be less than authorized capital, because authorized capital is the maximum capital. Right? Clear? Now, then what happened? Your father pays you 50 notes of rupees 10 each, 500 rupees. And you issue 50 receipts to your father. That is the subscribed capital. That is the amount received by the company against issue of shares. Clear? So make one note here. Subscribed capital will always be less than the issued capital. There can be an oversubscription. We will discuss that case later on. In most of the cases, subscribed capital will always be less than issued capital. Your requirement is 500. You are asking from your father that instead of giving me 1000 rupees, give me 500 rupees. Will your father give you more than your requirement? Never. He will say, my child is so good, I am ready to give 1000, but he is asking for 500, so I will give 500 only. I will not give 600 or 700 or 1000. So your father is smart enough to understand your policy. So he will not give you more than what you have demanded. Clear? So subscribed capital will always be less than the issued capital. Clear, friends? So this way we talk of share capital. Share capital is divided into three parts: authorized capital, issued capital, and subscribed capital. Authorized capital is the maximum capital that can be raised by the company through issue of shares. Issued capital is the amount that the company wants to raise through the issue of shares. And subscribed capital is the amount that the company is receiving against issue of shares. Clear? Clear, friends? So this is the classification of share capital. When we are going to prepare the balance sheet, we will show these three things. We will show authorized capital separately, we will show issued capital separately, and we will show the subscribed capital, that is the money received against issue of shares. We will show the subscribed capital separately. Clear? So till this point, if you have any queries, friends, you can always send me an email at ksjteaching@gmail.com. Clear? So in the next class, what we are going to do is, in the next lecture, we are going to discuss something about subscribed capital. right? We are going to discuss something about subscribed capital. Clear? So that's all for this lecture, friends. Thank you so much.